Alabama Department of Revenue Business Essentials for State Taxpayers Business Structures Learning Module.
The following video is intended to be an overview of the subject matter included and is not a comprehensive explanation of all aspects of the subject matter. The information contained in this video does not represent legal advice and is not legally binding on the department. Information regarding taxes and tax administration changes frequently and should always be confirmed through a tax professional. Please refer to the Alabama Department of Revenue website at revenue.alabama.gov for additional information.
In this lesson, we will define business structure options, provide tax filing obligations for each business structure. Choosing a business structure. Determining the structure for your business is an important step that will affect your tax reporting, filing obligations, and day-to-day operations. You want to choose a structure that balances legal protections and benefits. Business structures. There are four main types of business structures: sole proprietorship, partnership, S corporation, and C corporation. Sole proprietorship. This is the easiest business structure to form and gives you complete control of your business. There is one owner and no separate taxable entity. Partnership. A partnership is the relationship existing between two or more persons who join to carry on a trade or business. Each person contributes money, property, labor, or skill and expects to share in the profits and losses of the business. Types of partnerships. There are four types of partnerships: general partnership, limited liability company or LLC, limited partnership or LP, limited liability partnership or LLP. General partnership. In a general partnership, each partner has unlimited personal liability. Limited liability company or LLC. An LLC protects the owner from personal liability, and all profits and losses are passed through to your personal income without facing corporate taxes. Depending on the elections made by the LLC and the number of members, the IRS will treat an LLC as either a corporation, partnership, or as part of the LLC owner's tax return or a disregarded entity. Limited partnership or LP. An LP has one general partner with unlimited liability, and all other partners have limited liability. Limited liability partnership or LLP. In an LLP, every owner has limited liability and is protected from the actions of the other partners. S corporation. An S corporation or S corp passes income, losses, deductions, and credits through to their shareholders, who report the flow-through of income and losses on their personal income tax returns and are assessed tax at their individual income tax rates. This allows an S corp to avoid double taxation on the corporate income. C corporation, sometimes called a C corp. This structure is an entity that is separate from its owners. It can make a profit, be taxed, and can be held liable. This structure is independent of its shareholders. The chart below explains the reporting obligations for sole proprietors, partnerships, S corporations, and C corporations. Entity Classification Election or Form 8832. An entity uses Federal Form 8832 to elect how it will be classified for federal tax purposes. If a domestic entity election is not made, it will default to either a partnership, 2 or more members, or a disregarded entity separate from its owner. The state of Alabama will follow the federal entity classification election.